This week, we're discussing USDA's May global supply and demand estimates, along with shifts in ethanol production and exports. Hello and welcome to Brownfield's weekly commodity market update. I'm Brownfield's Will Robinson. Everybody, welcome along my co-host, Ben Brown. Ben, how's it going?
I'm good. How are you today, Will?
I'm doing all right. It's bright and sunny down here. Just got moved down to Austin, Texas. So a pretty big jump for me going from Columbus, Ohio down to Austin. But
Yeah,
yeah, things change
pretty
and
cool.
you keep
Yeah.
going. Yeah, yeah. So Ben, it looks like it's maybe finally kind of sunny there too in the Western Corn Belt for you.
Well, we're expecting some rain a little bit later today. We got some rain yesterday, but uh, pattern certainly starting to forecast a little bit drier of an outlook. So we'll see. But we've got some rain coming in this afternoon.
All right. Well, some maybe good news for planting progress ahead. Looking at some price changes on the week, we had somewhat of a deceptively sideways overall week with some movement kind of captured in between. So July 24 the corn contracts went up 3 cents to 4.72. That December contract for corn went up 5 cents to 4.93. Soybeans for July down 29 cents at 12.19. November soybeans down 7 cents at 12.12. Soybean oil on a cents per pound basis for July up 1.31 cents at 45.15. Soybean meal by the short ton for July down $26 at 361.60. The July wheat crop up 39 cents at 687, and then July wheat for next year up 19 cents at 735, and then that West Texas intermediate crude oil contract up 84 cents a barrel at 78.60. So Ben, what are your thoughts here on some shifts that we saw coming out of the Wall Street report from USDA?
The biggest highlight there is probably the wheat market, or at least that's the attention getter, up 39 cents in that old crop wheat market. However, we'll probably talk about that in a little bit when we get to WASI. So I'm gonna talk about that soybean oil contract. So that soybean oil contract has been drifting quite a bit lower. We've seen very soft demand in that soybean oil market, but the last couple of days we've seen pops in that market moving higher. Uh, we're recording this Tuesday morning. Some point today on Tuesday, the Biden administration is supposed to announce new tariffs and an increase of tariffs to Chinese products. The expectation is that that includes used cooking oil coming into the United States, either a complete ban or a very high tax on used cooking oil coming in. That has been viewed as very friendly to the soybean oil market, as used cooking oil is a direct competitor to soybean oil.
Well, Ben, just jumping right into things, talking about USDA's updated global supply and demand estimates for the month of May. We saw a lot of shifts that were in line with pre-report expectations. Again, coming largely within those expectations. There were some changes to the 23-24 demand numbers, and then some changes for ending stocks looking at this year. So, Ben, overall, what are your thoughts coming out of that report, really within, again, within expectations?
Well, let's start with old crop. So the 2023, 2024. On the corn side, we did see 100 million bushels more demand in the current marketing year than what we had last month, or at least the forecasted projection. That was split evenly between corn ethanol and corn exports. I was not surprised to see the increase in corn exports number. We've seen strong exports here the last couple of months, primarily to Mexico. Mexico has been a very strong buyer this year relative to what they normally buy and relative to other countries around the world. So Mexico's been a big buyer, and that's helped lead to some higher corn exports. But I was a little surprised on the corn ethanol front. We have not seen near as strong of corn ethanol production here in the last month as what we've been seeing. And of course, as we get into summer, it becomes a little bit harder as corn becomes a little bit more scarce and plants take maintenance. So I'll be interested to see if we hold that corn ethanol number or if we have to pull that back at some point. But I don't know if you have any comments about the demand side there, but those are just kind of my two things on the old crop corn balance sheet.
Hmm. Well, and looking at how looking at the splits between maybe corn and soybeans on how they handled the report, it was somewhat bullish maybe on the corn side and then bearish toward the soybean side. So moving forward, I guess looking at the soybean complex first, we saw some mild losses there within the soybean complex. Where do we go forward from here on maybe finding support within soybeans?
Well, in a lot of sense, the soybean report was bearish. The market finished higher. I think in some ways that was sympathy to both corn and wheat that had a little bit of bullish report. But the soybean report was bearish. There's a lot of soybeans out there. We're struggling on the demand side. If we look at exports for soybeans, and especially, and we think about new crop soybean export sales, they're very, very poor. I went back 20 years, all the way back to 2005. And new crop bookings at this time of the year have not been as low as what we are now, even in the trade war era. So that would have been the spring of 2018. So the 2019-2020 crop, right? Because that would have been the new marketing year in 2018, or in this time in 2018. We weren't this low even then. So there is some concerns, I think, on the soybean balance sheet. If I'm comparing the two, which is what you're kind of asking me to do, I think the corn demand numbers for new crop are very realistic. In fact, they might even be a little bit on the low side. So I certainly think we can achieve those. And if we start to see, a deterioration in the national average corn yield, which is very possible, that tightens ending stocks of corn. If we start to see a little bit higher corn demand, which is possible, that tightens the ending stocks number. So very realistic numbers, very achievable numbers. On the soybean side, those numbers, even though they're still, not the lofty numbers that we've come to expect over the last couple of years, I think they're still optimistic, right? Like we could see lower demand numbers in that soybean category, which then would grow ending stocks. So kind of a tale of two commodities here.
Well, Ben, looking at again that ending stocks adjustment, some of that came off. I guess came in tandem with some declines within South American expectations. But looking at U.S. expectations, a lot of this might be a loss of demand. But what about on the production side, where we're looking at, not hitting the panic button when it comes to planting yet, but it has been slow in a lot of areas and wet in a lot of areas. At what point does that start to impact what these ending stocks numbers might look like for this coming year?
Yeah. So if you're a U.S. producer of corn, especially, and you're sitting there and you have to feel pretty good to see a 181 national average corn yield and then only a 2.1, 2.102, so just a little over 2.1 billion bushel carryout, right? Like the fact that that's not 2.5, for instance, is, you got to feel good, right? Because we could pull down that national average corn yield given some of the late planting we've seen. Just here this last week, we have just under 50% of the corn crop planted, 49%. That's up from 36% last week. And then on average, it's down from 54%. So I don't know. I sit here and say we've made progress in corn planting, even a little bit more progress in corn planting this last week than maybe what I anticipated. But it would have been, I think, a nice mentality shift had we gotten over 50% planted. If we could have got to 50 or 51% planted, I think that has a very different mentality than where we sit below 50 here the second week of May. So this is a big week. This week and next week are both big weeks for corn planting. It's again gonna expect to be wet in the Eastern Corn Belt from Kentucky up to Indiana and over into Ohio, places that we need to see some planting progress. So we're gonna have a portion, probably a larger than average portion of the corn crop that's planted late. Of course, that is known to have a yield drag for the national average yield.
Yeah, well, and maybe a separate conversation coming up if some of this planting kind of happens within damp conditions on quality and the condition of the corn crop. But Ben, excuse me, Ben, moving forward into some of the ethanol shifts that we saw, both shifts within the production dropping, but then maybe also ethanol stocks decreasing downward. What's your take right now as we sit kind of ahead of that summer driving season, seeing these shifts? It doesn't seem like something to be overly concerned about at the time, but what are your thoughts as you see the kind of the movement within the ethanol and biofuels markets?
Yeah, so we've seen really strong ethanol production really all calendar year up until the last month and a half. So very strong. It led us to be optimistic that USDA would move ethanol production or corn used for ethanol higher. They did this month, and now I'm sitting here saying, that might have been a little too strong, right, or too early, because Now we've pulled back, and this is a mixture of a bunch of different things. Farmers are trying to plant; they don't want to deliver corn to the elevator or to the ethanol plant. So we've seen a little bit lower production. At the same time, you mentioned the ethanol exports. That's something that we very much needed to see to help improve ethanol margins. We've largely had historically large ethanol stocks. Again, we've been producing at very high margin or very high levels, and that's helped to build ethanol stocks. And so these higher exports are helping to pull down some of those lofty ethanol stock numbers, plus the lower productions helping pull down some of those ethanol stocks as well.
All right, Ben, as we go to wrap down today, or wrap up today's episode, going back to what you hinted at, talking about the Biden administration maybe imposing or increasing some Chinese tariffs on Chinese products, what kind of spillover effect do you think that'll have within ag? You talked about some of the cooking oil impacts there, maybe having a direct influence. Do you see anything outside of that?
Well, it's kind of a wait and see. The last time we did this, they retaliated with bans, or they retaliated in the soybean market, and then of course that spilled over to corn and other things like that. They haven't announced what they're planning on doing. I think it just from my kind of viewpoint here, the fact that they have no new crop soybean sales on the books signals that they're already adjusting, right? Like they're making that adjustment. But we'll see if anything officially comes out in retaliation either today or tomorrow after the announcement from the US.
All right, Ben. Otherwise, what should farmers and ranchers be paying attention to that could impact the markets?
Yeah, it's a kind of a fun week. So on Wednesday of this week, we have the National Oilseed Processors Association report coming out, giving us an indication of how many soybeans we crushed in April. Next Monday, again, we have export inspections and crop progress and conditions ratings, and I'll be very much interested in next Monday's crop progress report to see how much got planted, but also those winter wheat conditions ratings. We've seen them kind of hold here as of late, but I think we're running kind of out of time in some areas that desperately need moisture.
All right, Ben, you're just kind of returning to that NOPA report. I swear, I think that's your favorite report to break down whenever it comes out. Yeah. All right, viewers, listeners, if you'd like to learn more about us and what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.